Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. The U.S. Federal Reserve kept interest rates unchanged last night, embarking on a patient approach to monetary policy in the near future. The Justice Sri Krishna Commission finds Chanda Kochhar in violation of ICICI Bank's Code of Conduct. The bank has now treated her resignation as a termination. Kochhar has said that she is deeply hurt by the decision. And staying with ICICI Bank, the lender met estimates in the third quarter. Asset quality too saw an improvement on a sequential basis. And Qatar Investment Authority will invest $200 million or 1,400 crore rupees into BHARTI AIRTEL. The funds raised will be used to pay the mounting debt of the unit. The telecom major will report its third quarter numbers today as well. And along with BHARTI AIRTEL, 4 other nifty companies will report numbers today. Those are Power Grid, Vedanta, Hero MotoCorp and UPL. Let's talk about that big development overnight. The U.S. Federal Reserve signaled that it is done raising interest rates, at least for the time being. Fed Chairman Jerome Powell signaled that it is only prudent to adopt a patient approach at a time when the world economy is facing growth risks. Kathleen Hayes of Bloomberg News is here to tell you all about the fine print of the Fed's policy statement.
This was the meeting message heard around the world. I've seen a number of references to Christmas in January, what the markets were hoping to hear, perhaps. The Fed more concerned about the economy slowing down in rate hikes. It didn't happen on December 19th. It's definitely been made official on January 30th. The Fed making it sort of enshrining, I guess, things that it said earlier in speeches, which is that it's going to be patient now on rate hikes. Let's listen to what Jay Powell said at the presser.
We are now facing a somewhat contradictory picture of generally strong U.S. macroeconomic performance alongside growing evidence of cross currents. At such times, common sense risk management suggests patiently awaiting greater clarity, an approach that has served policymakers well in the past.
So let's take a look at some of the things that were in the policy statement that were underscored by Jay Powell at this press conference in answer to reporters' questions. Yes, he removed that word patience in reference to further future rate hikes, and in fact removed the phrase we plan on further rate hikes entirely. That's been in there for the last 3 years. It cut a phrase saying that the risks to the outlook were roughly balanced entirely. It cited global pressures, tame inflation as reasons for this patience. Now, on the balance sheet, what's going on there? Markets were so nervous about it. For the first time ever, the Fed didn't just have a monetary policy statement where all those phrases came from. It also had a balance sheet statement. Basically, it reiterated what it has said previously when it talked about the plan, but it did say that it's prepared to adjust balance sheet runoff due to economic and financial changes. Jay Powell said they're getting closer to neutral. They need to be transparent. So there does seem to be, at least the Fed's telling us, we're thinking about it.
Well, at least the commentary from a month ago and now is starkly different. The contrast is visible. But the effect on markets was quite significant as well. Wall Street, in fact, cheered the dovish commentary from the Federal Reserve, and sentiment was also boosted by robust earnings from Facebook and Boeing. Taylor Riggs of Bloomberg News brings you all the updates from New York.
Really interesting session. Of course, early in the pre-market trading, we had a lot of positive earnings coming out of companies like AMD and Boeing, and then at 2 p.m. we got the Fed announcement, and that really drove shares even higher than they were before. The Fed came out and said that they were going to continue to be patient. That, of course, is sort of pushing all of the risk assets higher today, as they think that the Fed may not raise rates as fast as we once thought. So let me run you through the numbers. The Dow up 430 points, or 1.8%. The S&P up about 1.5%. And the NASDAQ, that tech-heavy index, up about 2.2%. So the NASDAQ and the tech sector clearly the winner in Wednesday's session. Interestingly enough, because we were talking about the Federal Reserve, I wanted to mention the Russell 2000. That is the small cap sort of domestic focused stocks. Because the Fed said that they were going to be patient, we had a weaker dollar by about 0.4% and a weaker dollar relative to the yen by the same amount. And so the Russell 2000, or the small cap indices, really did underperform the market, only up about 1% on the heels of sort of a weaker dollar and a more patient Federal Reserve. I want to go into some of the individual sectors because, of course, tech really sort of leading the way again today. Both Apple and AMD are driving that. Apple came out after the closing bell on Tuesday. That finished higher by about 7%. Services growth for Apple is a much higher margin business, so growth in the services sector is sort of offsetting declines in iPhone sales. That's giving analysts something to cheer about. China's slowing growth also wasn't as much of a concern, again pushing the shares higher. AMD surging up almost 19% and sort of giving a relief to some of the other chip makers that had forecast slowing growth in 2019, like Intel and Nvidia, and AMD saying that they're still going to continue to grow in 2019 in the high single digits, and that is better than some of their competitors. I also want to mention Boeing, because Boeing was a big leader in the Dow today, second best performer. Boeing, of course, had earnings this morning, revenue topping $100 billion for the first time in its 102-year history. They're also forecasting revenue of up to $112 billion for fiscal 2019, beating expectations. You have revenue, earnings, and cash really going to rise this year as earnings came in very solid. And maybe even more importantly, they are coming out and saying that they will not be affected by the China tariffs and the China trade fight. That's to take a look at your Wednesday U.S. markets. I'm Taylor Riggs.
And so much to talk about. Just the cliff notes. Equities rise, the dollar falls, and the yield curve in the U.S. steepens. But that's what we take into the Asian markets this morning. Sophie Kamruddin of Bloomberg News is joining us live from Hong Kong with all the updates there. Sophie, mostly a positive start. What are you picking up? What's the fine print?
Yeah, some nice tailwinds indeed coming through from Wall Street as the Fed takes on a patient stance on rates. Plus, there is that raft of earnings. So Asian stocks are extending gains led higher by Japan. You have tech shares also finding support from better than expected results from Facebook and Alibaba. And Samsung is gaining ground despite profit missing estimates. Chip demand remained weak in the first quarter, but Samsung does see a recovery in the second half. The Kospi looking a little changed though, as materials are weighing on the benchmark. Now in Sydney, oil players are leading gains on the ASX 200 and iron ore miners are continuing to rally, although capital economics is throwing cold water on prospects for a sustained climb in iron ore prices after the Vale-driven spike. Now here in Hong Kong, the Hang Seng is adding 0.8%, while the Shanghai Composite is adding 0.4%. Back to you.
Thanks so much for that, Sophie. Well, let's turn to India now, and obviously, there's several questions ahead of the presentation of the interim budget, which comes tomorrow. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. But to say that the cues from overseas are positive would be understating it.
Yes,
what are
absolutely,
you picking up?
Alex. Yeah, I agree. Well, we're looking at about a 6 cents of a gain for the SGX Nifty, with the Nifty inching back towards the mark of 10,700. And we've had a very range-bound day of trade yesterday. Clearly, as you can see, the Nifty hasn't changed at all. The mid-cap and the small-cap indices advancing by as much as 0.5%, with the Nifty banking indices also doing very well, largely on account of Axis Bank and ICICI Bank, which saw substantial gains yesterday. ICICI Bank, Tata Motors, and Vedanta, all of them are seeing a considerable uplift. ICICI Bank, of course, stands out since its earnings came in post-market, and well, they've largely met expectations with a sequential improvement in its asset quality as well. In terms of other stocks, we're keeping an eye on HDFC Bank, which was the only loser in trade yesterday. But when it comes to FIIs, well, very little has changed, and there's something which has been off a trend of late. While your gross numbers are also small, there's been very little participation. And in terms of contributors, ICICI Bank and Axis Bank, along with SBI, were the three top gainers on the indices, and those stocks are the ones which actually led the indices, or rather gave some support to indices. On the other hand, we saw weakness in HDFC, Reliance Industries, and HDFC Bank as well. But moving on to your futures and options space, well, rollovers are picked up, but they're not up there yet. And at 42%, with 2 sessions to go, we're seeing substantial increase in the open interest as well. And the Nifty banking futures, again, rollovers standing at around 43%, just a notch above the Nifty. And in terms of your open interest when it comes to options, well, it is now essentially 10,800 call, which has the max OI, followed by something like a 10,600 put, which gives you a wide range, and of course unwinding in 10,900, 11,000 calls. What I'm also keeping an eye out on is in volatility. The VIX has come off by as much as 3% to around 17.9. And your Nifty put call ratio remains unchanged. It's the same for the Nifty banking put call ratio too. So if you can have that on your screen. But let's move on and talk about, two stocks which remain in the F&O band, the Adani Enterprise and Adani Power. Actually, we also have Bank of India, which is in power along with Diwan Housing Finance. But there are no big changes except for the fact that Gen Irrigation has moved out of the F&O band. But in terms of other stocks, we have Equitas Holding, Oracle Financial Services, as well as PFC. There has been a substantial movement, but there has been a lot of accumulation. And United Breweries, ICICI Prudential, and Canton Homes sees unwinding, but this is natural because we are into expiry, so we are expecting to see a considerable increase in the drop in open interest for the January futures. Again, a mixed market, Alex, and something of a trend. Given the fact that we've been seeing the Nifty within a very tight range, and again, some strength would help traders who are long in the market.
Thanks so much for that, Agam.
Sure.
Well, let's talk about one of the big updates from last evening from back home. The Justice Sri Krishna Committee has found Chanda Kochhar in violation of ICICI Bank's Code of Conduct. The panel, which was formed to look into alleged wrongdoings with respect to the loans given by the bank to Videocon Group, submitted its report on Thursday. And the private lender, after that report, has decided to treat Chanda Kochhar's resignation as a termination. Vishwanath Nair is joining us on the phone line to tell us what all of this entails. Vishy, what are you really reading into this, and how are you essentially identifying what this means for Chanda Kochhar?
An investigation led by a retired Supreme Court Judge, Justice B.N. Sri Krishna, has found material evidence against Chanda Kochhar, the former MD and CEO of ICICI Bank, in the Videocon loan case. Now, according to the report, Chanda Kochhar acted against her fiduciary duties and was in violation of the Code of Conduct of ICICI Bank. This was primarily because she did not recuse herself from the Videocon loan case and did not disclose to the board members that there was a conflict of interest involved in this case. Importantly, one point to understand here is that Chanda Kochhar's husband Deepak Kochhar had business dealings with Venugopal Dhut, who is the promoter of the Videocon Group, and therefore this conflict of interest was not disclosed to the ICICI Bank board or the loan approval committee, the credit committees, because of which the checks and balances that were put in place by the board of the bank were rendered useless, according to the report. The board, after reading the report, came to a decision to treat Chanda Kochhar's separation from the bank, which happened in October 2018, as a termination of her services. Alongside terminating her services from the bank, the bank's board has also decided that any unpaid dues or any unvested stock that Chanda Kochhar might have would become void, and that the bonuses that were paid out to Chanda Kochhar by ICICI Bank between April 2009 and March 2018 would be clawed back. Now, this is an important development in the case where CBI has already filed an FIR against Chanda Kochhar, Deepak Kochhar, Venugopal Dhut, as well as some of the members of the credit committee who were on the credit committee which approved this loan. So, according to Sandeep Batra, the president of corporate center at ICICI Bank, the bank believes that this matter is closed as far as it is concerned. It will be cooperating with the CBI as part of the CBI investigation, and the bank believes that there is no need to initiate any kind of investigation against the bank's current officials who were part of that original credit committee which approved the Videocon loan case, because they believe that there has been no allegation or any proof of their wrongdoing in this case. But as far as Chanda Kochhar is concerned, the punitive measures by the board have already been decided.
All right, and after ICICI Bank's board decision became known, Kochhar put out a statement saying that the bank's decision has caused her immense hurt and pain. In an email statement, she said, and I quote, "I am utterly disappointed, hurt and shocked by the decision. I reiterate that none of the credit decisions at the bank are unilateral. ICICI is an institution with established robust processes and systems which involve committee-based collective decision-making with several professions of high caliber participating in the decision-making. I continue to have faith and belief in my conduct as a professional, and I'm certain that the truth will ultimately prevail." End quote. All right. Well, that was one development with regard to ICICI Bank. There was also the earnings to look forward to. Darshan Mehta is here to tell you all about that. Darshan, the numbers came in, the net profit declined, but what else are you picking up?
Yeah, so the NII was stronger. The NII came in much higher than estimates. It was a growth of 21%, coming in at almost 6,900 crores versus our estimate of 6,700 crores. Profit was flat, but this time around provisioning was much higher. The asset quality did improve. Some of the key highlights on the numbers are, first of all, the profits was aided by the higher NII as well as other treasury gains that came in. Asset quality was extremely strong. The performance was good there, but the other operating parameters were stable. The performance of the subsidiaries was a tad disappointing, and the bank has not received the RBI divergence report yet. What our brokerage is saying, CLSA is of the belief that they have raised the target price to 470. They are saying that the lower slippages and rise in coverage interest increases the visibility of an earnings turnaround. Slippages were at a 15-quarter low, and CASA growth key to market share gains. Macquarie has also raised the target price to 460. They are saying at a current market price, you get the subsidiaries virtually free because what the price is the core business. And Morgan Stanley has also raised the target price to 525. Is the top Asian pick that they have. Remember, the ADR ended up 9%, but also remember that the stock here was up almost 6%. So the incremental gain will not be as high as what the ADR did indicate.
All right, thanks so much for that, Darshan. Let's turn to BHARTI Airtel, which is going to also report numbers today. But before we get to those numbers, there's also a big development that came in overnight. Airtel's found a new investor for its Africa business, and the telecom operator is selling a little more than 4% stake to the Qatar Investment Authority. And this is the second such stake sale in that entity in 3 months. Sumit Sarkar is here to tell you all about that. Sumit, this is all about the debt, right? What does the latest infusion do to that debt?
Well, yes, it is all about the debt. The company needs to bring down its debt, and it's doing everything that it can to do that. Now, the latest infusion is done by Qatar Investment Authority. Now, they will be infusing close to $200 million, that is close to 1,400 crore rupees in BHARTI Airtel's African unit. Now, QI will own close to 4% stake in BHARTI Airtel's African unit. Now, this is according to our calculation based on the early equity valuation that BHARTI Airtel had given for the African unit. Now, this is the second fund infusion done by the company in the last 3 months in Africa business to pay debt, which is another amount, if you see, is not that big because it is only 1,400 crore rupees, and the consolidated debt of BHARTI Airtel is more than 1 lakh crore rupees. But this fund infusion in itself is positive because this shows the kind of interest that investors have in the African unit. So that is one thing that is positive for BHARTI Airtel. Now, earlier, if you see, 6 investors had infused close to $1.25 billion in BHARTI Airtel's African unit, and this is the second fund infusion done in the last 3 months. Now, this fund infusion is important for BHARTI Airtel because it will not only help to bring down its debt, which is more than 1 lakh crore rupees, and also fund the heavy capital expenditure plans of the company that it has. Now, if you see, the company's leverage ratio is also higher at around 4 times, while Moody's is expected to downgrade the company's credit rating. So this fund infusion will help BHARTI Airtel on both the fronts. Now, Airtel has been selling its stake for other businesses that other than the India wireless businesses. They have been selling stake in other non-core operations like the tower business, the DTH business. They're also in process of selling their fiber assets, and they're also planning a listing of this African unit. So earlier, if you see, they had offloaded stake in Bharti Infratel, that is the tower arm, and also in their DTH business. So this is the third attempt done by BHARTI Airtel to pare its debt.
All right, Sumit, but this all comes in the larger context, of course, of the numbers that will be reported today. What are the key earnings numbers that you are putting together with regard to the estimates, and what are the aspects to look forward to?
So if you see the key numbers for Bharti Airtel in the third quarter, now the revenue is expected to be flat at close to 20,451 crore rupees. EBITDA is also expected to be flat at close to 6,275 crore rupees. Margins are expected to come in around 30.7%, while the company is expected to report a net loss of close to 990 crore rupees versus a net profit of close to 119 crore rupees in the last quarter. But remember, in last quarter also the net profit was because of a deferred tax asset and not because of core operations. So this and this time also analysts are expecting a net loss, but this could well be a net profit number if the company records a deferred tax asset in this quarter also. Now the average revenue per user, that is the key number for Bharti Airtel, that is expected to be higher by nearly 2% to close to 102 rupees per user versus 100 rupees per user reported by the company in the last quarter. Now ARPU is expected to be higher because of the company's new strategy to remove the low-end subscribers. Now net subscriber addition is expected to be negative for Bharti Airtel in the third quarter. Now analysts are working with a subscriber base of close to 32.3 crore by the end of the third quarter versus 33.2 crore that was there in the end of the second quarter. Now Airtel adopted the strategy in the third quarter where they were removing the subscribers that generate low revenue, and that is the reason why the ARPUs could be higher for the company but not the revenues. Now operating cost is expected to be higher because of higher network demand coming in from the higher data usage that we have been seeing for Bharti Airtel. Along with that, if you see, all these cost pressures are expected to come in for the India business, but for the African business, they are expected to do well in the third quarter, also continuing the good round. Now, the finance cost and the depreciation are expected to be higher because of rising capital expenditure and rising debt of the company, while the Africa business, that is expected to benefit because of stronger seasonality and stronger cost-saving initiatives taken by the company in the African unit. Lastly, the enterprise business, that is expected to be seasonally weak, while DTH and the home revenue is expected to be softer compared to last quarter. Lastly, key things to watch out for from Bharti Airtel earnings would be management commentary on the impact of minimum ARPU plans that they have initiated in the third quarter. Along with that, any updates on the Africa asset listing, any update on the capital expenditure plans of the company, and their outlook on ARPU and revenue going forward would be key things to watch out for from Bharti Airtel earnings.
Well, analysts are expecting a steady quarter when it comes to UPL. Revenues are seen growing by about 12.5% to 4,700 crore rupees. EBITDA is seen higher by 16% on a year-on-year basis, while margins are more or less steady at around the 20% mark. Net profit, however, would be only a marginal improvement of about 3.6%, coming in at close to 595 crore rupees. In terms of the key factors to watch out for, would be the volume growth number, which analysts are expecting to be in the range of 8 to 10%, aided by strong growth seen in their largest market, which is the Latin America market, although partially offset by some extent because of the rupee appreciation. However, domestic operations would be largely flat, and rupee depreciation would aid their other businesses in the North America, Europe, and rest of the world. Higher tax rate and interest costs, that would restrict the profit growth, as well as the fact that we are working with a higher base when it comes to the profitability in the previous quarter, in the same quarter last year, on account of tax write-backs.
Despite a 5% growth in volumes, we could see some pressure on profitability as far as Hero MotoCorp is concerned in the third quarter. If you look at the revenues for Hero MotoCorp, we are expecting a 6% growth, and of course that will be on the back of 5% volume growth and close to 1% kind of a realization growth on the back of price hikes. However, we are expecting the EBITDA to decline by nearly 4%, and profits also are expected to decline by nearly 5% to come in at a level of close to 770 crores. Margins would be under pressure. 150 basis points decline is what we are looking at on a year-on-year basis. Margin seen at 14.4%. Of course, apart from the earnings, the key thing to watch out for in Hero MotoCorp is the demand scenario, because in general we have seen the motorcycle sales slow versus the scooter sales, and also we'll ask the management on how really do they see the export markets growing in the next few quarters. So these are the few factors that we will be watching out for Hero MotoCorp in the third quarter earnings.
Well, we're not typically expecting good set of numbers coming in from Vedanta, just like most of the metal companies. Top line, we're expecting a downtick of more than 8% in this quarter to a number of around 22,340 odd crores. In terms of EBITDA performance, we're looking at a downtick of 14%, and the margins too are seen contracting to 26% as compared to 28% in the corresponding quarter. Profitability of the company is expected to sink in by more than 50% on consolidated basis. In terms of the EBITDA performance, performance for the company, while copper division is expected to register a loss of 15 crore as compared to the profitability that we've seen in the corresponding quarter. That's mainly on account of the closure of this unit. Aluminium unit 2 is not expected to perform well operationally. 94% downtick coming in there. Iron ore 45% downtick. Power is not expected to show a good show either. And Zinc International is expected to show a downtick of around 80%. Oil and gas division perhaps will be the only one which is expected to register in some gains of more than 50%. Steel division for that matter is also expected to show up a profit of around 205 crore as compared to no operation that the company held in the corresponding quarter. What really goes behind the making of these numbers, or rather disappointing set of numbers, would be the lower LME prices along with the higher cost and the closure of the copper division. The key things that we like to keep an eye out from these earnings will be the progress on ramp up of a 1.25 MTPA smelter. Apart from that, we'll also be looking at outlook or any commentary coming in on the base metal prices.
Hey, thanks for that, Nikki. Well, you know, the presentation of the interim budget, like I said at the start of this program, is going to take place tomorrow, and there's lots of stories that are already up on the website, BloombergQuint.com. Not just stories, there's also several videos, explainers that will tell you what to expect really when a finance minister presents the budget tomorrow. So have a look at all of that, and besides this, there are also several other stories that you can look at over the course of the day. Just atop of that, of course, is the fact that the National Company Law Appellate Tribunal has declined the plea of an operational creditor of debt-ridden SR Steel seeking a recovery worth 800 crore rupees. And ahead of the February 1st deadline for switchover to the new broadcasting regime, the Telecom Regulatory Authority of India has asked DTH operators to honor prepaid commitment on ongoing long-duration packs if the customer wishes to continue with them. All right, that's all you need to know going into trade today. There's a lot more coming up in just a bit, so do stay tuned. This is Bloomberg Quint.